Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's welcome Udayan Mukherjee to give us some of his thoughts. Good morning, Udayan. As always, a pleasure having you with us. Well, you know, the phrase that is now added to the stock market vocabulary is melt up. It's indeed happening in several stocks and in many markets. How do traders and investors approach a melt up phase?
Morning, Lata. I don't think there's any other phrase which describes more accurately what we are witnessing right now, pretty much across every asset class. I mean, we discussed it the last time we spoke, and this is really a classic global melt-up, and anybody who stands against it or takes contrarian positions is going to be burnt very badly. We've seen several times in the past that this is such a powerful train that you do not want to be betting against it. Now, time will tell us how it will stop, when it will stop, but before it stops, to take a preemptive strike against it is absolutely suicide. So I think traders have no option but to party along. We've got an event ahead of us. I don't know if there is anything in that event which could potentially lead to any underperformance compared to the rest of the global markets or asset classes. But short of that, I don't think there is any point in trying to second guess this melt up that we're witnessing. There is another thing which has happened over the last few days, which is, I think, also the genesis of some further momentum in this melt up, which is that the dollar index is breaking down. And if that happens, we can see further melt up happening in the emerging market space and even in the commodity space, which is something we are witnessing. And you know, I was watching CNBC US also accidentally, and there is so much talk there about now that the tax package has happened, the infrastructure package which is about to come, $1 trillion plus package from Donald Trump. So a combination of the dollar breakdown and talk of another infrastructure package which might fuel momentum, I think is leading to the $1.5 billion of FII money that we've gotten this month already.
Okay, Udayan, good morning. So, do you think the pre-budget rally has more legs to go as well over the next 2 or 3 days, especially in the budget-sensitive stocks and sectors?
You know, Anuj, my sense is that this is far more global than local. I mean, we can fashion it as a pre-budget rally, but if you just compare India with other markets, we're pretty much doing the same thing, sometimes even worse, as you guys were discussing. So I don't think this is a pre-budget rally. This is a global melt-up which we are participating in. The question is whether the budget will lead to some outperformance from our market or some relative underperformance in the near term, depending on what comes about. Also, the market's gone up 6% in very quick time, nearly 600 points on the Nifty. So it's also possible that before the event, while there is nothing which in the event which suggests, other than the capital gains tax, which can disappoint the market, people might choose to take a bit of profit because 600 points have happened already. So you can just before the event lighten up a bit and then lighten up or add up after the event is passed. So I don't know how it will play out over the next couple of days, but the global thing is the key, not the budget or earnings.
Okay, so global markets continue to do well this morning. In fact, most of Asia is up almost about 0.5%. Udayan, hi, good morning. The other thing that we're witnessing is a pickup in growth, at least in some sectors. I mean, this time in earnings, we've seen the consumption space do pretty well, whether it's names like HUL, we were talking about Avenue Supermarts, Maruti, etc. Is this a space that despite stratospheric valuations, there's still money to be made?
I think I mean, if that does not fire, then you don't have a market. I mean, you know, this market's largely the two big pillars are consumption and financials. And consumption numbers have been pretty good. So I'm still a little disappointed with the kind of rural numbers which are coming about. One would have thought that by now a little bit more of a pickup would be discernible. That's not quite the case in some of the numbers which are coming out from rural India. But at least in the consumer good companies, the numbers are quite good. Though United Spirits, maybe for specific reasons, was a bit of a disappointment. But you're right. I mean, this is very much the space to be betting on. And along with financials, they can carry the market higher. Look, we've had a breakout. The market was stalling around the 10,500 kind of zone. And powered by the bank Nifty, we've had a significant breakout, which has taken the Nifty a good 600 points higher above that. And that is the kind of step function which this market is moving along over the last 20 months. It makes a big jump, then it consolidates, people worry about valuations, and then it makes another big 5-6% kind of a move. So we've had that already. maybe there's a couple of 100 points more to go, and then we'll have to ask whether we'll have consolidation or a correction from this big melt-up phase.
Okay, by the way, the markets have settled in pre-open nowhere near what the SGX Nifty thought we will. And the reason for that is perhaps the couple of Asian markets have slipped quite a bit. If you take a look at Hang Seng, for example, that's now down quite a bit in the red. And this, of course, has been a bit of a global move. Ashwani, we're not having, looks like we will not have that kind of gap up which the SGX indicated. What would be the first trade here, and what would be your 9-10 call?
See, first trade need not be at 9:15. I think you will get a 150-200 point dip, which you need to buy at some point, and that is what I am looking for. Individual stocks will be the first trade for the morning.
Okay, and what would that stock be?
I think PC Jeweler has corrected to its averages. Probably, you will have upside. So that is a buy with a stop of 550, target of 585.
This 150-point dip that you are expecting is for which index? Nifty Bank or Nifty?
Nifty Bank 150 thereabouts.
All right.
But
Okay.
Nifty 50 points. Why
Sure.
that will happen, that probably we'll know.
Yes, yeah, you did tell us that those are the numbers we should be looking at. Sudarshan, anything now that is moved into your radar?
No, apart from the fact that we buy the Nifty, and whether it's open stronger or slightly mild, doesn't matter. There are two stocks. One is futures retail, and that's a buying opportunity even at elevated levels. And the second is IndusInd Bank. IndusInd Bank is probably the most attractive of the private sector banks.
Okay. I was just looking at all the global indices. I think year to date actually, or rather month to date, it means the same thing. We are actually the worst
We are
performer.
underperforming. The MSCI emerging market is up 8%. MSCI Asia ex Japan
And
is
we
up
are
8%.
up only 5%.
Dollar terms, and dollar is also down. The big trade this year has been on the dollar and the carry trade. So obviously that's helping all markets. But Udayan, so metals have done well. Obviously this carry trade is just going on, and this morning as well we have zinc prices at multi-year highs. Do you think that trade is still on?
Oh, absolutely. I mean, not just metals, any commodity. I mean, the CRB index itself is doing very well. So, I mean, these are all anti-dollar trades which are playing out right now. This is going to be incredibly difficult to time, Anuj. I mean, at some point, the frenzy in the rally will begin to look ridiculous, but even then you should not make the mistake of standing against it or take an adventurous short position. This is for traders, because you just cannot draw a line yourself one morning and say it just became ridiculous this morning, it wasn't before that. But I think chances of this blowing up into something even more significant in terms of a valuation explosion, which will make a lot of fundamental analysts red-faced, is very, very high. This has signs of the 2007 kind of a build-up as well. This too will end at some point and not end very well perhaps, but you don't know. I mean, if global growth expands and gives the market the leeway to expand for another 3 quarters or 4 quarters from here, then you're talking about a much bigger expansion or a melt-up which may have just begun. So timing is difficult, but we are in the throes of a melt-up, and you should keep that in mind while investing.